Hello everybody, today we're doing a video here on AMC. Um, as you know, they are a movie theater that is considered a meme stock. If you've requested that, we do an analysis, so let's take a look at it. I'm currently not invested in AMC. I do monitor it because one, it's interesting, and two, there is opportunity for options, whether you're selling options or buying options, there's always opportunity with them because there's a lot of volume. So let's go ahead and get down into it. As you can see here, their free cash flow was negative free cash flow over the last 3 years. Their first 3 quarters of 2023 were still negative, but they were improvements from 2022. And AMC debt has decreased to 4,799,000,000. So as you can see here, from 2014 to 2019, they were free cash flow positive. This is something to look at these numbers. Just something to keep in mind in case they return back to free cash flow. As you can see here, 2020, we know movie theaters shut down, so it's really negative. 2021, they started opening up a little bit, not as negative. 2022, pretty negative. But recently, from the most three quarters, we see they're operating at negative 200 million in the 200 millions, which is much better year over year. In September, of negative 600 million. So it's a big improvement, 600 million to the negative 200 something million. So that's just something to keep in mind too when you're monitoring their free cash flow, if they can get back to free cash flow, which will be good for their business because you need cash flow to grow your business. You need cash flow to pay your debts, and you see they have a lot of debt. As we move on to their revenue, they are projected to grow at 22% this year. Currently, the calculations from year over year from the last quarter is currently growing at 14%, which is where we're going to use our calculations just to see what they're valued based upon current growth. As you can see here from 2014, this is 2 billion. Up into the 2017 to 2019 range, we had 5 billion in revenue, and as you can see, 2020 COVID very low. 2021 started opening up, so higher than 2020. And 2022 it was at 3 billion, almost 4 billion, and this year it's going to be somewhere in the 4 billion range. We don't know the exact number yet, but so they are growing still. Will they continue to grow after that? We don't know because you can see here from 2018 to 2019 is pretty stabilized, and then there's a lot more streaming companies now, and less people are going to the movie theaters, but movie theater ticket prices are increasing. So these are things to monitor going forward too when you're investing in things like Regal, AMC, Cinemark, etc. So as you can see here, we had talked about them being a meme stock, and there's a lot of people talking about synthetic shares, and this is something that can maybe potentially back up their claims. I mean, this is in a court process right now, and this is very interesting. As we can see, AMC stock generated 511 million worth of revenue for security lenders in 2023 alone. The stock was a popular target for short sellers due to AMC's plan to convert the APE units to common shares. Um, and what is stock lending? Stock lending involves temporarily lending company shares to investors or financial institutions, mainly used by those engaged in short selling. Short sellers borrow these shares, hoping that the stock price will drop. This allows them to buy back the shares at a lower price, returning them to the lender and making a profit. Lenders earn fees or interest for loaning their shares, and their earnings depend on factors such as the demand for borrowed stock, current interest rates, and the overall market situation. So this would go hand in hand with people's claims about the synthetic shares and how they don't match up, and they're allowing too much lending to go out there. And that may coincide with the fact that AMC generated the most revenue for securities in 2023. The most. They are the company that generated the most money for security lenders in 2023 at 511 million. That is an insane amount of money just off lending the shares. So that's not, I mean, no company was able to match that as far as security lenders. So that's something to keep in mind when you're monitoring this stock as well, especially when you start to talk about whether it's being manipulated, which we know is being manipulated by Wall Street, and to what extent. Their total assets, as you can see here, they're at 8 billion, but their total liabilities are at 10 billion. Um, so their outstanding shares is at 163 million. They did convert shares from apes to units. They did reverse splits, etc. So their NAV value is currently sitting at negative $13.13. That's something that we can't change. It's not something that I can manipulate. This is just based upon their assets, liabilities, outstanding shares. So As we come to here, their net income has become positive in 2023, the last two quarters, just something to keep in mind. 9 million and 12 million respectively. And as of 9/30/2023, net income improved. Oops, I'm sorry for the messed up wording there. Year over year, 105% because it was like negative 212, and then it improved to 12 million. So AMC cash on hand improved to 757 million as of 9/30/2023. The issue with them improving their cash is they also diluted shareholders. It's been a common thing, and why a lot of people hate um, Aaron, because he constantly is diluting investors, which is hurting the share price. So an analysis price targets, and I have this for you. Always take it with a grain of salt and do your own research. So currently, as of I made this video, it was the last share price, which is $4.91, and it was on a 2-day losing streak. Well, as the time of filming this, it's also on a 3-day losing streak, and it's lower than 4.91. But the price target, average price target, is $8.35. AMC Stock Calculation. This is based upon 14% growth and using 1% of their revenue from 2014 to 2022. The reason we're taking 1% is because if you look at these numbers here, they are kind of similar to where they used to be at when they had free cash flow. So this is, kind of like a free cash flow simulation, but it's not. It's based upon their revenue. So that's why we're using a 15% discount rate, 2% perpetuity, 163 outstanding shares. You come to a discounted cash flow price of $7.43. If I was going to give myself a 40% discount rate because of how volatile AMC stock is and how much uncertainty there is and manipulation, then we would come to $3.93, which is under the current trading value. Um, so these are just based upon 1% of the cash flow or of the revenue. And if you looked at the free cash flow numbers I showed you earlier, they're very similar to what they used to be. Um, Now, if we come over here to a more aggressive price calculation using only a 10% discount rate, still with 1% of revenue, 14% growth rate, and 163 shares, then we come to $13.52. We give ourselves a 40% discount rate, that's $7.55. So these are the numbers that I've calculated for AMC stock. I am currently not investing. Let me know what you think. Both calculations could show that AMC is currently undervalued if they continue to grow revenue and improve their free cash flow. Their net income is positive the last two quarters, so there is, some financial hope for the company. But we shall see, because they do have a lot of debt, and streaming wars are still continuing to happen. Thank you.